What's up, guys? Welcome to the video. So today I'm going to do a live take profit trader withdrawal, and I'm going to have a discussion on staying grounded after wins because it's something that I really want to talk about. Because in one of my last videos, I was talking about the negative side effects of overconfidence, and I want to expand on that and also share some of the darkness that I went through on this journey, learning how to battle my demons in the market. And I'm not going to explain every single detail, and it may be pretty vague for now, but I do want to have a conversation that leans into the pressures of trading for survival, which is what I do. And with that said, let's get started. So right now, I'm just verifying my bank account through Played so I can process this payment for this payout. And you can tell that relative to the last payout, this is small, but $1,000 is a lot. And that's also what we're going to talk about soon after I process this. Because 1,000 is a lot compared to working long hours. And that was a realization that I kind of continuously tell myself to stay grounded and not be too greedy and chase too many trades and overtrade, you know? But we will get into that soon. Let me just finish processing this. I will do this as fast as possible because I know that there's a lot of value in the discussion that I want to have, and I want to get it off my chest. So, as I mentioned, we're having a discussion on staying grounded after wins. And my last payout, after I processed this one, my last payout was 4.8K. The one I processed now is 1K. And I had to stay grounded after having a good month so I don't be too overconfident and let it cloud my judgment. Because July went well and I started August strong, okay? But overconfidence has been a mental barrier and it's led to reckless trades and getting too attached to trades just because I felt like I couldn't lose from past wins. And that's what feelings do or emotions do. And that mindset has clouded my judgment many times. And some people call it winner's tilt, but this time, after giving profits back on many occasions, not occasions, many times, and hurting myself in the markets, I'm more aware of how overconfidence can cloud my judgment. And for this payout, I was being extra cautious because it was the day of FOMC. It was moments before FOMC, so I didn't want to put on too much risk. And I stuck to one mini contract, aimed for one base hit, and just walked away, not getting greedy. And that was a win itself because when you walk away, you are in control and you are not letting your emotions make you impulsive and chasing trades in the markets, which can be really dangerous. So the first trade is typically the most sound-minded entry from what I noticed. And any trade after that, based on my data, becomes more irrational because more emotions are involved and decision fatigue kicks in. So I kept it simple with a small base hit of 30 ticks and left it at that. And I trailed the trade aggressively. And although if I had adjusted my trailing method, I could have hit my 60 tick target profit, my original target, which was the top order of the opening range gap. And I got stopped out at 30 ticks. But if I had just trailed the trade to the previous candlestick's high, it would have ran to my target. But it was my choice to trail aggressively, and I'm still learning how to manage myself during trades. my mindset was that I only needed 30 ticks, and 30 ticks is enough to cover living expenses and food, and it's better than grinding long hours at a job. And that perspective helps me stay grounded. Just remember that 30 ticks is a lot, especially with one mini contract, copy traded across multiple accounts. So yesterday, I got a 4.8K payout right here. And based on past experiences, I know that an out of control tilt session can happen at any moment, especially when things get too good. And relative to that payout, 1K is small, but compared to working long hours, 1K is a lot. And I thought of it from a survival and a freedom perspective to remind me that taking a step back can't hurt me if I don't take a trade, because things can go south, man. And 1K is enough to put food on my plate and cover a significant portion of my rent. And I also really value the time freedom 1K will give me, because life is made up of time. And these realizations help me stay grounded. And I know how quickly things can turn on a green day. So since I'm more aware of overconfidence after past mistakes and how any kind of tilt can completely ruin my day, I felt okay with walking away. And I know how I react when I have profits. I tend to give it all back because the next trade is one that I'm more emotionally attached to, and that can lead to irrational decisions. I call this profit attachment tilt. And one solid trading day a week beats working countless hours just to survive. I've been there working 80 hours a week just to barely get by. And I can't afford to mess this up because this is how I survive. And I know professional advice says not to rely solely on trading income, and that pressure can wreck your trading psychology, but I put myself under this pressure on purpose. I'm testing my limits, putting myself in a situation where it has to work, where the consequences are real. I've put myself in bad situations before in my trading journey, and my darkest months are from trading. But despite setbacks and dark months, I believe it has built character. And pressure creates diamonds, and you truly become a changed man when you have to figure it out, you must figure it out. It taught me important lessons and how dire it is to make a change to break out of bad habits. Don't get me wrong, bad habits always creep in, and it's something I fight every day. But if I want to survive, I need to stop the bleeding when these bad habits show up again. So right now, the stakes are too high. I'm renting my apartment and covering every single bill. And if I slip up, and I've done that plenty of times, the consequences are brutal. And you really don't know how dire making dumb decisions are until you really hurt yourself trading and it starts to put your livelihood at stake. And that's why I fight to stay hyper aware of overconfidence and mental drifts. Mental drifts. And today I was content with this 30 tick win. I slowed down. I wasn't impulsive, at least today. And my accounts are alive to trade another day. And I actually felt in control today, walking away and closing the charts. Who knows what would have happened if things felt off and I kept trading, because things did feel odd when I was trading. And maybe I would have just blown accounts and had more downtime in between payouts because I blew the accounts, and that would have sucked so much. And as for the technicals, I stuck to the setup that has earned me payouts in the first place. I didn't force trades just because I thought I couldn't be wrong. And I'll pull up a screenshot of the trade in a second after I finish this discussion. Or probably I thought I couldn't be wrong in the past, so I would force trades, or I probably could have thought I could have made more. So I didn't force trades because something fell off and I didn't want the risk. I just went with my gut this time. And the feedback of negative thoughts my mind was giving me was kind of like a warning sign. It's time to take a step back, because it won't hurt you if you take a step back and just have a clear mind on the next trade or even the next day, because I can't get hurt. I keep saying this, I can't get hurt if I just stop trading. Things could get worse and my day could get ruined if I just gave that 1K back to the markets, because that's food and rent money. And sometimes the smartest move is just walking away. And I wanted to continue trading another day and surviving. And I know this discussion is kind of long, but we're almost done. And then I'll bring up a screenshot of the small 30 tick trade. But more than the 1K, I value the time freedom it gives me. And blowing accounts without backups would mean a full week with no income. And that's not something that would just hurt a little, that would hurt a lot. And all it takes is one mistake to spiral into a dangerous session based on past experiences. And if anything, I'm more self-aware of how emotions and trading can lead to self-sabotage. And something that helped a lot was journaling. And journaling helps identify patterns that lead to tilt sessions or brutal sessions. So rules can be made to prevent getting hurt again. And it's going to happen, but if I can improve mitigating that risk each time, each bad session, then I'm okay with that. Anyways, I know that I'm more emotional than the average person, and I went on a bit of a rant this time, but I hope it gave some perspective. And for future directions, there are other topics I want to cover that were asked about by other traders and just come up in my mind when I'm making videos and journaling. And I'll list some of them, but not all of them, because I keep adding as I go, and I still need to figure out which topics I'm going to tackle next. Some of these include identifying mental drifts and or actions to improve discipline breaks, minimizing downtime in between payouts, tackling the intraday trailing drawdown. That one's a big one. The trap. Okay, the trap within the daily payout model. Overcoming psychological barriers, profit attachment tilt, my thoughts on the ICT 2024 mentorship model, which is what I trade and what I trade around. I don't trade the model exactly all the time, but I use the concepts every day in my trading, and other topics I may have not mentioned. So let's pull up the chart and then we'll end this discussion. Or I won't pull up a chart, but I'll pull up a screenshot of the executions. So let me just open OBS. And then let me change, instead of the browser, I will choose my notes. And my notes, oops, sorry. Let's bear with me. I'm kind of trying to figure this out as we go. I have 3 screenshots, okay? One of the 1-minute chart, one of the, let's see. Let me put this down because I don't want to share all the stuff in the background. Let me see if I can hide this. Okay, so this is the main note that I want to share. And as you can see here, I'll just scroll it down for a bit. This was on August 20th, ICT 2024 Mentorship Model, or I just call it that. I don't trade the model exactly how ICT created it, but I do use the concepts. And it does look really simple, right? Let me make sure the screen is visible. I'll probably, yeah, it looks okay. So here, let me show you again how it shows my TradingView account. So no one says anything, man. Here it says my name, created with TradingView August 20th. Okay. Just for some of the people, you know how people get. They start to doubt you and you give you some, I don't know, whatever. I don't want to talk about it. So it's really simple. I just went for a reversal at a key level and I targeted the top of the opening range gap high. So my key level is this black level. My opening range gap high is this blue level. And I just went from that key level. When it swept it, I entered in as best as I could as the candle was forming. it formed up here. I tried to get in here higher, but my entry was right here. I saw it forming and I tried to get in. I just couldn't because I was using like a limit order and I was dragging it into there, into the candle formation. And then I took the reversal. My mindset was on 30 ticks. So this whole move is actually 60 ticks. But when I got 30 ticks in the trade, I kind of trailed it to a candlestick high. But it was really aggressive, but it was 30 ticks. And I thought that if the whole move happened and it still ran, I would still have my 30 ticks because it was me staying grounded and just locking in profits. But if I had just trailed it just a little bit higher, not so aggressively, I could have got my whole 60 tick move. But since I've been trading or having some good trading days, I didn't want to push my luck because I know I get unlucky when I've had a good run. So see how I got stopped out at 3387.7? So I think I trailed it to this candle, right? About 30 ticks, got stopped out, and it kept going. But if I just went for like previous candlestick high, previous candlestick high, previous candlestick high, it would have gave me the 60 ticks. But I was happy with 30 ticks because across multiple accounts, I only copy traded across 4 accounts, but that was 1,000. One of the trades was a little bit more than 30 ticks, and after the profit split, I got $1,016. But this is the 1 minute chart. New York session was slowly trending up. It hit this buy side liquidity and then quickly reversed. And then it did reach the top of the opening range gap high. And the top of the opening range gap high measured, I think, about 255 ticks. So based on the size of the opening range gap high, it was kind of lower probability to reach the midpoint of that opening range gap midpoint based on my data on trading gold futures for the past few months. But this is the 1 minute chart. This is the 30-second chart, kind of zoomed in, and you can see this was the fair value gap that originally formed on that big volatile candle, and it quickly reversed and closed it. And it used it as an inversion fair value gap. And it did reach the top of the opening range gap high, but that's it. And I like how price engages with the opening range gap, top border, midpoint, and bottom border. But it's something that you may be interested in studying. It's something that I study every day in the markets, and it gives me structure. But this is the 30-second chart, kind of zoomed in, and this is a super zoom in so you can see the whole setup. But the stop was 30 ticks. It was a 1-to-1. No, it was a 1-to-2, but I trailed it to a 1-to-1. But anyways, I just want to leave it at that. Let me know if any of the topics I mentioned resonate with you, or if you want to talk about something that you're struggling. That would be fun to talk about. But anyways, take care, peace out, and good luck out there.